Okay, folks, welcome to Market Wrap for Tuesday, the 1st of March. Okay, so we did an earnings trade on Salesforce.com. They reported after hours. What we did here is we sold 20 contracts, CRM 265 calls. That's about 20% out of the money, a little bit more than that. So the probabilities were greatly in our favor. Obviously, the options which expire this week are greatly inflated. We sold those options. We did not buy them. We will profit tomorrow by the deflation of the implied volatility of those options, and we'll close out the trade. We'll eyeball. I think we could easily get an 80% profit by tomorrow morning. So assuming that no other news hits the headlines, good trade. We'll move on to other charts I want to talk about. First, I want to go to commodities, and I want to take a look at commodities on a weekly time frame. And folks, they are just ripping through the roof. This is wheat, weekly time frame, bananas. We're going up higher here. Resistance is, we're going to have 100 handle the bushel on wheat, corn, ripping, weekly chart. Home heating oil, which I just got filled up on today. Talk about sticker shock. And I look at home heating oil as part of my business. And I still got sticker shock. And here you have it. Look at this. We are just blowing through the roof here on home heating oil. Initially, my wife was just going to get like 300 gallons, and I said, no. Call them back here. We want a full tank. Here's the hourly chart. So this is going higher. My point is, the reason why I want to go over these charts is that we have a lot of problems here. And I think that ultimately what we're going to have to do is, with the midterm elections coming up, is whisper into the President Zelensky of Ukraine, into his ear, stop with the urging him to not make peace and to now think about the midterms and to save their hides and worry about inflation, because this is just unsustainable. This makes the 1970s look like a walk in the park. The good news is that our inflation trade, our inflation portfolio is doing very, very well. I have zero plans of selling any of it in the short term. Now, before we go to strategy, let's talk about trades that we executed on today, the TQQQ. Initially, let's go to the daily chart. We'll come back to the weekly chart. Initially, we sold the, I forget what strike, 55 strike expiring this week. We booked profits there of about 59%. Rather than rolling down to a closer strike price, I'm too worried about positive news hitting the headlines with the peace deal or peace talks talking tomorrow. So I decided, you know what, go out a month and go higher. Get away from the current share price and go out in time. And that's what we did. Let's go back to the weekly chart. I went up to a 65 strike, sold those calls. And if by chance I said I sold puts early on the TQQQ, my bad. I don't think I did, but I may have. We sold calls at the 62 strike way up here. So we can afford to be wrong for several days. But I don't think we're going to be, because this weekly chart, you don't want to see this. A double top down below the 20 mark. And that's what I think is setting up here. I think we're rolling over. That's my forecast here. I think we're rolling over. Perhaps if we get positive news out of the Ukraine tomorrow, the peace talks are going well, hopefully a ceasefire, well, then we could see a short covering rally. But that does not take away the fact that inflation is ripping through the ceiling. In fact, what we're seeing, if you take a look at the 10-year yield, our yield's collapsing. I went over this last night, how yields are collapsing with inflation on a tear. The reason why is because, fear and money rotating into the bond market, but the yield curve is just falling off of a cliff. So what I think is going to happen here is that if we get a short covering rally on a peace deal or a ceasefire, you're going to see yields pop up because we forget really, really quick. And we'll refocus back on inflation and the Federal Reserve. We are now in March. The big March meeting is coming up very, very soon. So the volatility in this market could very well stay elevated for longer than expected. Now, what I want to do here is talk a little bit about strategy moving forward. This is a monthly chart of the EDC. I'm trying to scout out funds that have no China exposure. It's very difficult. Not ones that have options. You can find mutual funds, but it's difficult to find ETFs to trade options with no China exposure. But be that as it may. Emerging markets on a monthly chart are in about as tight of a wedge as you can get. Now, I would be a buyer here, but I'm worried about the markets overall rolling over and rolling over hard. I'm also worried about the dollar, very, very strong. And we know the dollar rallying is a bad thing for emerging markets. But if we get positive news, folks, what I'm trying to do here, the reason why I keep bringing this up is I'm trying to look past this current crisis and look for opportunities coming out of it. Because the solution here is not complicated. I've said this before. This is not a 1,000-year religious grievance that needs to be resolved right here and right now and probably is never going to go away. No, there's a commitment that's requested, demanded now, that Ukraine has no NATO affiliation and no nukes. The damage is done to Russia, so we've taken away any reason for them right now to want to back off. So when this is resolved, we're going to see the dollar tank because inflation is just completely out of control. The Federal Reserve has yet to raise interest rates. God, folks, they haven't even stopped buying treasuries. My guess is that on Thursday night, when we take a look at the Fed's balance sheet, it'll be at new all-time record highs. And what's going to happen when the dollar begins to tank? Well, gold may correct in the short term, but that's going to be a buying opportunity. Emerging markets, they're going to break out because you're going to see the dollar in free fall, especially how we weaponize SWIFT and executed on it. We always threaten it. We've only done it a few times in the past. I believe it's with Iran, North Korea, and now Russia. So in all probability, what I'm going to begin doing here is buying very, very long-term leap options if they have them. I don't know how far out they go. Leap options like when you go out a year or two on strike and begin to leverage up on emerging markets in preparation for what I believe is going to happen next. You can see how the Stokes are becoming oversold. Weekly chart. Weekly chart is ugly. I think we're going to break down further. Unless we double bottom out here and hook up. You know, we're at a precipice right now. Let's draw what I'm trying to illustrate. You know, we could either do this or we can get a continuation breakdown like that. If you're bullish, you want this, obviously. If you're bullish, you certainly don't want this. So I'm in no great rush to put on this trade, but I have to assume that those long-term call options are going to be pretty cheap. One thing I want to point out here is that at current this week, we have broken down below, with 3 trading days left to go, below the lower band of support on a weekly time frame. All right, let's take a look at tips really quick. Tips, Treasury inflation protected securities. You know, continues to validate what I've been saying. Inflation is on the rise. The dollar continues to strengthen despite the inflation. Why? Fear. When the fear is gone, this is rolling over. In the short term, in all probability, it's going up higher. The VIX, very strong day. It looks as though we are going up. That will be bearish for the S&P 500, which was down today, down 1.52%. The transports, down 1.64%, stopped dead at the 200-period moving average, and they have broken back down below support on volume. Now, last night, I spoke about the banks, and I was worried about not so much the daily chart, but the weekly chart. It wasn't the XLF. I was using the Direxion fund, the FAS. There we go. And I was talking about these Stokes and how they were putting in lower highs and lower lows, and how I was very concerned. And sure enough, today, daily chart, today, they rolled over. This is the FAS. This is the leveraged ETF. So we rolled over 10.71%. So divide that by 3 to get a true feel for the banks. We're right back down at a key support level on the FAS. And if you want to take a look at the XLF to put things into more percentage-wise context, they look the same, but we are at critical support. And when you take a look at the FAZ, which is the bear ETF on the banks, I mean, this thing looks like it's getting ready to rock. I just saw this a little while ago. Look at the Stokes here. Look at how powerful these are. RSI, powerful. Daily chart, really, really scary stuff here where I long with the financials. Thank goodness we put on a short trade here. But I think we're going to have to get a little bit more aggressive with the short trade on the banks because this is not looking good at all. The trip Qs, I've already kind of gone over this with the TQQQ, so I'm going to skip this. I'm already long in the tooth here. Let's go on to gold. Gold was up over 2.25%. How far are we from all-time highs now? We're stone's throw away. We could be there tomorrow. We could beat all-time highs tomorrow. Another view. We've broken out. This is a monthly chart. We did this last month, so let's put it into context. We broke out early last month. We pulled back. Same thing could happen here again. So remember, I know these charts are looking outstanding. You look at them and you're saying to yourself, man, they can't go down. Remember the problem that remains out there, and it's a good problem. What if we get peace? That's going to be a problem in a very short term for gold. It's going to sell off along with the dollar, along with every other commodity out there. So we need to keep that on the front burner. Now, if these peace talks break down tomorrow and the shelling of these cities heats up, I mean, my God, gold is just going to go through the ceiling. As to our trades, the gold mining stocks, GDXJ, we're up 5% today on this, and I think it's going up higher. Nugget, we were up over 8.33% on this, and I think it's going higher. We opened up a new trade by selling puts on NUGT. We're probably going to have to roll that trade up tomorrow. Book profits, roll it up. Silver, up 8.5% today, and I think it's going higher. On volume, no less. The silver mining stocks, we were up over 6% today here. So our inflation trade is finally paying off. We were patient, and now it's paying off. Gold money up 1.2%. This is going up higher. Our little spec stock, our little egg company, consolidating here. A little bit of topping action, in fact. But I'm not going to be the least bit surprised. If this blows through the roof, along with every other commodity, I'm not going to be the least bit surprised. You're going to see panic buying. What I did today with home heating oil, I caught myself. I said, I am panic buying right now. All right, folks, that's it for tonight. Have a great night, and I will talk to you tomorrow. Be well.